GME update on liquidity at the moment and where we might be heading from today, Wednesday the 15th EAD. Just getting the pre-open pricing coming through for Thursday the 16th. Harry's been hard at work, just adding to the time-lab liquidity, which is the most recent iteration of our liquidity series, and this one here is the average line of these 5 time periods down here. And as we can see, this is the bid. At the moment, the price has been reaching right up for the bid, which means it's very, very loose, and we've had price depreciate reasonably quickly and still at a very high level there. That's the 4 hour. I do apologise, I've got very slow internet here. I'm at the farm in Tasmania, which is one of the southern states of Australia. Here we can see on the day here, it's still very high. I left it on the day here just so you can see the difference in the periods in the slightly larger time scale, which is a good way to look back and see if we're at peak liquidity at the moment, and really it's time to get out. But we're not quite there. I still think that we're in an upward trend. That's just looking historically at how tight it has been before, when the gamers who are trading this have been fighting the dealers. And so if we went back and we looked at historically, we can see that it has regularly hit that line as it was coming back off, as those sold puts at the peak here of the price were moving down. So here we can see this is the initial accumulation back in the second half of 2020. The accumulation of both the underlying, very similar to the way that we would see the dark pool interest on our website, nakeddelta.com. We use the dark pool, and it tells a very similar story. And we can see the way that gamma works very similar in these situations here, with hedging continuing and liquidity staying quite tight even in downward price movement, just because there is so much cross hedging that the bid and the ask are still really quite tight, even though the price is declining. But just looking through, we can see here we go. They've had another go, a bit of accumulation here. They had a really long go to get it going again here in April. And it took a long time to fire up. We can see that in the DPI too. It's that sort of process where they need to. I know there's been a split here, and the split was a 4-1. So I suppose these tops here were about 400 or 500 an initial February, April high in 2021. To get back to these prices here at 25. With this amount of the underlying, they really have to have that price up. There's been so much hedging. There's a lot of theta burn involved in this. I would say that they're probably still hedging for a price of around that 120, 130 split. I haven't done the maths on it. Just surmising that it would need that sort of return. Again, we can see this great tight liquidity here, very illiquid, pushing the price up. And then if we went and had a little bit closer look where we are now coming into today, we can see that we're definitely moving into a section of liquidity there, which might start to see some price appreciation. But it's still really recent. I'll put in this extra line here showing where the green probably starts, where it's worth looking at buying again. Not necessarily holding. I think you can hold pretty tight until you do see us get up to those very high levels. And there has been some standard traders who have been taking standard positions and defensive positions in the option chain. So they're obviously holding the underlying and they're defending it. And we've been giving that in our daily analysis. So you can see here it is very high. They haven't yet reached that 0.5, I don't think. they have in a previous iteration going through, but here I don't think they've yet reached it. Anyway, I hope that short video helps you understand where we are with today's liquidity, and I'm still not thinking that we're at the bottom of this dip. I'll be proved wrong, of course. Thanks.